Welcome to Trading Lounge and the Asian Report for the 4th of January 2019, and for the ASX200 here. As you may recall in the last video, I've been trying to work out this particular trend coming down through here, and some of it I can easily understand and some of it's a little bit complicated. So the complicated bit is all this congestion in here, as it doesn't really give a nice wave structure as such. So I can count it in this particular fashion here, where we have a low in place already here, and we would be moving higher in terms of at least an A and a B and a C wave up here, if not a 1 and 2 and a 3 moving up into this space here. So we need to have a strategy for the market moving higher. So I've got that, and we'll look at that on the intraday. But I've also got to count where we move down further from here, and this ABC here would be counted differently. So if I go to to the 4-hour chart here, a little bit complicated, but the A wave here after 5 waves, 3, 4 and 5 for the A, and then an A wave here, and this really moves down in 3 waves here. So I'm looking at it as a B wave. I mean, I could count this down differently here, but this may have to be a 3rd wave here, and it's just too short compared to this structure and this structure. So I'm a little bit dazed by this, so I've just been waiting for more evidence. But an A wave here, a little A, B and a C wave here for the B wave here, and then we pretty much just continue to move down from here. So we need a strategy to go long, and we also need a strategy to go short here as well. So let's just go into the 1-hour chart and look at this. This also too here, in terms of the trading levels, we've got 5,500 here. So this is the support, also because the move up here, the fractal ratio, the 50-60% retracement levels also on the 5-5 here. So that makes it quite nice here, in that we've got a nice support here. So would be bearish for sure, obviously, that if we had this as resistance here, then we would be looking to move down much lower from that point. But we do have support here, and also too, this move down through here in Elliott terms appears to be in 3 waves here, so a corrective move. So we should be able to take that top out there. The other point here too, 5,500, the 500 here. So we use the trading levels, which is based primarily off the Fibonacci numbers 1, 2, 3, 5 and 8 as a price ratio coming up the side here. So in that case we have 500, then we have 800 here, and the halfway mark between these two is the 5,650, an unusual number, but as you can see, it plays out here quite nicely, and we'll also be able to use it to go long here as well here. So we're closer to this number than this number, but we don't want to really go long while we're under this. If we do go long under this here, then we've got ourselves, we're at risk here. Other numbers are important. 5,600 is important and 700 is important as tops and bottoms, but this is always the balance point within the correction. So we really need that as support there. We may be able to get an early entry in that. We'll have a look. But let's just go to the hourly chart here. So this is also why I haven't put any sort of stock trades in the market, because I really need to work out where this is going, because this is really governed by the banks, and if the banks are going to be finances moving up, it doesn't necessarily mean that resources will be moving down. They can move together, and if resources and finance move together, well, then this market really rocks at that point and really moves strongly. So there's a possibility for that, with crude oil moving higher, spot gold's moving nicer up into 1,300, and also iron ore, we're looking for support on 500 for that, and that can possibly move higher as well. So we could be moving higher faster, quickly. So we don't want to be married to being bearish or bullish at this stage. We want to be open-minded. So with this here, last time we spoke, I think we're just in this little A wave area through here. So we were looking for a B wave up and a C wave back down, and then a bounce from that. And we've sort of got that. So this is why I think that we could be bullish, because we've got this little A wave here, B wave here, and C wave here. And then this move up here. Yes, we could call it down for one and back for two, down for one and back for two, and those sort of things here, but would still need to break lower. The other point here too is that, so in a nutshell, a break above this here, right? A break above, a move above this, a move above here would make this, would confirm this as an A and a B and a C wave here. We don't need those anymore. So yeah, a move above this here would confirm that this is an A and a B and a C, and if that's the case, then this top would be taken out. And if that's going to be the case, then we could look at this length here and having another length to the upside there as well. So we certainly need to be long there. We could also probably move in a little bit earlier here too by having something like this here. You know, bridging that there, so that might open up a small position there. We also want to see if Friday closes, if Friday's going to be bullish, then Monday's going to be bullish as well. If Friday's going to be bearish, well then Monday's going to be bearish as well. The other point here too is that the little move up through here and the pullback here, it's also pulled back into its 50-60% retracement level here as well. So this brings us into this little area here. This is subgroup 2, just under 5,600 here. So the market is currently vibrating at that 5,600. For the market to leave that on the downside, we would need group 2 here, the 65, 72 and the 80 to become the retested resistance. So we could say that here the 72, the 5,572 in here, if that becomes the retested resistance, then you've got your short trade from that point, okay? And then if you're going to get your short trade from there, then we also need to be short under here as well. So obviously if the market comes down to the 5.5 here, we're going to see a bounce here, but I would be holding that. Well, you can take profit, do whatever, everybody does their own thing, so that's fine, but expect a bounce, but then further down from that point here. Once that becomes the retested resistance, then you can short here. You could also short the bounce as well, but you'll have to remember that the 1.8% mark is here. So this could be a larger A wave, B wave and C wave down to this point here, and then move up from there. So there is risk at that stage, okay, until the 5,500 becomes the retested resistance. On the tick chart, I don't know what we can glean from this. I'll need to bring in a bit more data here. So yeah, so I think last time we spoke, we were in here somewhere, weren't we? We were looking for a little B wave to come up into the 5.6 here, so that played out, and then we were looking for a move back down to 5.5 here. So it plays out nicely as this here, as an A and a B and a C. And you know, just looking at this in a bit of a nutshell, it does appear that we've got sort of an impulse. I mean, I can count this in both ways, but yeah, also too here, we can talk about this here a little bit further as well. So this move here, I can, from the top here, we've got 1, 2, 3, 4, 5. So I can see we've got 5 waves here. So we could call this like an A wave and a B wave and a C wave here, okay? But we could also call it going to the downside here too. We can call it wave 1 and 2 and 1 and 2 here, and then continue to move to the downside. But if this top here is taken out, then that would confirm that this is an A and a B and a C, and we'll be going higher. So technically, we could say to ourselves, we can go long from this point here as well. I mean, the S&P 500 is down in negative territory, so you know there'll be pressure on that side there. So I am playing against the market here in this case, but I'm just pointing things out, you know. So So yeah, we could go long. Well, put it this way: you could get your first position on 56.30 here, because that's the top of Group 1. If that became the support, there will be a reaction from this level here as well. So you may even want to get in earlier if it's going to be bullish as well through these guys here. So even taking this top out here now also refines it to a move to the upside here as well, because this here, this move down from here, if this is down for 1 and back for 2 and down for 1 and back for 2, well, this move here and this move back up here, this has really moved back up a good 50%, hasn't it? You know, it's moved back, I won't measure it out, but, you know, I can just eyeball it and see that it's moved a long way back up. So taking this top out would also trigger a long trade to the upside. Now, on the downside here, then if this is wave 1 and wave 2 here and wave 1 and wave 2 here, then this low here would trigger that out too. So this could also be a trigger to the downside here as well. But we're looking for this is the support area here. So going in here would be slightly riskier, but also too, we could also look at this here, just splitting hairs now. This one here could also trigger a short trade as well. Okay, so we're really working the 5-6 here on this. But if you're going to take this short trade here and this one here, make sure that they're much smaller than you normally would do, you know, so they're just sort of, you're building in a bit of a buffer on creating some pocket money to be able to handle perhaps more risk and more contracts as you move higher in that market. So okay, that's the ASX200. So yeah, and this is why I haven't really taken any short trades, any long or short trades on the ASX. And this is also what we're going through with the S&P 500. It's going to be the same game here as well, and that's why I haven't put any new trades out in that market. And just coming back from Christmas and that, so I just want to see where. Just want to see, you know, which way the market's pulsating, so to speak. Okay, let's move on a little bit and let's go to. I'll just go straight to the Nifty at this point. There's more people trading this than the other markets that we're looking at, so I'll try and shift this to the front of the video here rather than having to have it at the last at the end there. It's a bit annoying having to wait or to scroll through. It's like in a shop when they put you're going for the milk or something and they put the milk right at the back of the shop. So, so with the Nifty here, we are looking. This whole move to the upside here appears corrective in terms of an A wave here. And then a small A, and then an ABC for the B wave here, and a C. So we've got an expanded flat for the B wave. I mean, we could call this, you know, we could call this wave 1 here, and really have this as wave 2 sitting over here as well as an expanded flat. But you don't normally get expanded flats in wave 1 to wave 2. It's not that we don't. I do see them at sort of at very small degrees of wave structure. I do see them in larger structures as well, but normally in derivative markets, so FX markets. I mean, this is a derivative market, but it's based off cash and shares, so it's not a freewheeling thing, you know. So it's possible. So that would be wave 1 and 2, and then we could have this as wave 1 and 2, and then up for wave 1 and back for wave 2. But the problem with all of that is that we are now, this little move up through here has moved back through its 61.8% mark here. That's not a big deal. It could still push up from this point here, but you know, we'd want to see this basically move lower here to help us confirm that we're actually in the right direction here for all of this. I don't have a very clear impulse. I mean, I do have a this little, let's go into the hourly chart and I'll just explain where we're up to with this. So, one of the little annoying things here is that This low here on the cash market, it was very clear that that this is the low here, and that's fine in this case. We've had that little gap from the holiday there, and also we've had this gap here as well. And then we've also got this little spike here as well, and I just don't like it when a market, you can see all this sort of, the main channel here is this, and then we get that jump, that spike here, you know. So as I mentioned before, do we take this as the top or do we take this as the top? It's always a bit iffy on these cases. So it may well be that that the actual top for this is over here in this case. I'll just grey that out here. We'll have to come back to this, and it will reveal itself later on in the process. So I would naturally, if I take that as the high, then I would naturally look at this as wave 1 and wave 2 here, and then moving down for wave 3. And in fact, we can put, let me just, I've got a bit of work here to do, so to explain a few things here. So if I took this here, and that's there, so this 38.2% retracement level, if I can move that up to that space there and that to there. So the market can pull back up to 10,750 or 10,37.38 there. Okay, so just take that on board for a moment. Now the move down here doesn't look like 5 waves from here, does it? Like we could count it down for 1 here and back for 2 here, and then down for 3 here and back for 4 here. But that wave 4's pulled back up into this space here, hasn't it? But it does appear that we've only got 3 waves down here. But if I look at the cash market for this for a moment, if we go to the cash market and put this on, this is just a 15-minute chart here, then we can see a couple of things here. First of all, this little spiky top here, we can see that this one here comes in pretty close to the top here as well. So it's quite possible that that's the top here. I do see from this area here that we could count this down here as 1 and 2 and 3 and 4 and 5 here. Right, so, but this also looks impulsive here as well. So a bit of a dilemma there. But this move here, this is the one that interests me a little bit, because we've got wave 1 here, wave 2 here, and then we've got 1 and 2 in here, and 3 and 4 and 5 in here for the 3rd wave, then the 4th wave, and then we can look at this as the 5th wave being down here. I can see that this wants to bounce back up here because it's all, maybe it's just the end of the session, but it's got that sort of ending sort of pattern here. So it can come back up to the wave 4 of 1 lesser degree, which will be just in here, just as I mentioned before, so the 1030, 738 sort of area in here. So yeah, a bit of a clearer picture here. But this also looks impulsive up here as well. So we can look at this as wave 1 and 2 and, well, 1 and 2 into here. And then the 3rd wave is 1 and 2 and 3 and 4 and 5 to here for the 3rd wave, the 4th wave to here, and then the 5th wave up to this point. And then this could be looked at as an A wave here, a B wave here, and a C wave here with a low in place here, and then continue to move up from there. So coming back to this space here, it's possible, this is why I need to talk about this for a second. It's possible to have wave 1 here, with this is an A wave here, B wave here, and a C wave here. I don't think it's the case because we've pulled down past the 61.8% retracement level here. Okay, so I think that we're on the right track with our bearish trend here. But yeah, so I don't think I've got anything on the tick chart here. Excuse me. Let me just bring this in here. No, it's not going to tell me anything sort of new here. I mean, if there's a low here, there, right, I can see this is all of the 3rd wave now. So, yeah, so from here we've got, well, from this point here we've got 1, 2, 3, 4, 5 here, from here to here. So this one here this one here would be part of this one here. So this is why we'll make a new low here and then bounce. So whatever happens here, we can bounce back up to these old highs here. Okay, so just be mindful of that with your stops. So they need to be out of the way there. So just going back to the hourly chart here. Yeah, so we can bring this down to here now for this here. This level here is really important. This is what we talked about on the ASX200 as well. So, or the ASX on the 200, we talked about 500, didn't we, and 800, and then the halfway mark between these here is the 5,000. Well, this number here, 650 here. So once that becomes the retested resistance, then we're down further from here. So I certainly want to put this short under here, under the 500. And if you're not short in this, then what can we do there? I mean, it's going to get a bit bouncy in this space here. Whatever you do, you'll have to leave the stops out of the way here for the moment. Let's just see this finish off here. Let's see this finish off here. This is going to, this could break one more low in here for this here. Okay, I'll leave that at that. Starting to confuse myself. Let's look at the other markets. So let's go to China. As I mentioned before with China here, this is the 4-hour chart, the China A50. We're looking from this wave 4 here. We're looking down as wave 1 and 2 here. And then we're working as 1 and 2 and 3 and 4 and 5 here. And then once that's in place, we're still looking for a wave 4 here and then a wave 5 here. I didn't really want to get involved in any of these, all these wave 4s here, bouncing off 10,000 here. 1 is the strongest number in the market, and it's definitely going to deliver some support here. So I just don't want to be involved in being long or short within this, because it would just be too messy. And this is also reflecting back into the Hang Seng as well. So let me find Hong Kong here. So with Hong Kong here, I've had the problem of, we've had the A, the B and the C for wave 4 here, and it moved down nicely as wave 1 and back for wave 2. But all this in here started to get really like, it should be wave 3, so it should be really stretching out, but it's not. We're being tied up at this medium level here, 25,000 or 25, halfway between 20,000 and 30,000, so it always plays out nicely. But I still have to line it up with China in that sense, you know. So yeah, it's just that it's really messy here. At some point, for the 25 here and this current low here, at somewhere within all of this, we're going to get a new low and then we're going to retest it. So then that new low will become our reference point to short. I mean, if I go into the 1-hour chart here and have a look at this here, you can see that this is the problems that I've got here, is that this countdown here, perfect, not a problem. Don't need that bit of text there now. Just keep that simple. Don't need that. So the 1 and the 2 are fine. So wave 3 coming down here needs to be longer than wave 1 here. So I can count the first wave here as 1, 2, 3, 4, 5, not a problem. A, B, and C for wave 2. And then this is where it gets messy here. So I don't know what I'm supposed to do with this here. It's just weird. I mean, it's just weird. It's just too messy for me to work with. So I'm taking a guess that we're looking at something like this here. And this wave 5 of 3 will come in here somewhere. And then we'll also get a messy situation with wave 4 here. And then down for wave 5 here. So, yeah. I mean, we're short in this market. So so I brought the stop down from being up here down to on this one here, but yeah, I don't know if you want to take part profit within this space here. It's still more, you know, I mean, maybe if the US markets and everything just sort of drop from where they are, then we'll move straight down from here, and that will be nice. So let's just give this a little bit more time, but I would expect some sort of, you know, some sort of I don't know, some sort of complication to come into this space here. And once that low's in place here, from wave 2 high here to wherever that wave 3 is there, the 38.2% retracement levels here, which is also going to probably overlap this area through here as well. I mean, that's why I've also been going back to the 4-hour chart here. Nope, I haven't done that here. At least I have, sorry. Not as lazy as I thought I was. But, I mean, it does make a really nice sort of possibility for a triangle pattern to come into here, you know, which would leave this as wave A here, wave B here, wave C here, wave D here, and wave E here, and then down from that point. But that's not really in line with what's happening in the Chinese market. So this will be quite time consuming within all of this. But we'll see. I mean, it does, this move down, this ABC here really represents a nice type of A wave forward triangle, and this particular move here also brings in that triangle pattern as well here, because it's not stretching out like a third wave. And if it's not stretching out like a third wave, then you've got to kind of start scratching your head and thinking, well, what else can it be? So let's move on to Japan here. So with Japan here, last time we spoke, we'd been looking at this move. This is in the same vein as the Chinese market in a way. We've got wave 1 here and wave 2 here. Nice strong third wave here. We're looking for wave 4 to pull back into roughly this space, or 38.2%, and then for it to move down from the holiday thing. So we've had, in case I was wrong, we would be long here, and being short under this space here. So if you're short here, that's good, and we can also bring that down too, and we can also short new lows here. Just be mindful there will be a bounce off the 19 here. It shouldn't be too severe before we make new lows again. We need to make new lows below here, so down around the 18.5 would come in nicely for that there as well. But we'll leave the stop out. Once the 19 becomes the retested resistance, then we can bring the stop down here further. If you can't handle that exposure, then it's better not to be greedy, and it's better to take part profit at the next largest number, and then it gives you a chance to breathe properly. And yeah, I mean, all this leverage, you know, the problem with it is that you know, if you're a new trader, you tend to, the natural human nature thing to do is that if you lose more, then you'll try and get that money back by risking more, and you'll dig yourself a big hole. So forget about the big bucks. They'll come once a year if you catch a nice trend, but otherwise, you know, just chip away and make a good percentage and manage that risk properly. So we've got, no, that's it then, isn't it? Because we've slipped in around the other way for the Nifty. Alrighty, okay, thanks for tuning in. Sorry for such a long video.